Hey, what's up, stock compounders? Brad here. So it is time for our Q&A session. It's been like 3 weeks since I've done a Q&A, so I'm sure the questions are piling up for you guys. We did get quite a few in for this week, 39 comments on this community post. But before I get into the Q&A session, I did a video yesterday on what super investors bought in the second quarter of 2021. And I mentioned Topicus, which is a company that Chris Meyer, author of 100 Baggers, manager of Woodlock House Family Capital, bought in the first quarter of 2021. But someone brought to my attention in the comments, love when you guys comment information like this, that Chuck Akre actually bought into Topicus as well. And Chuck Akre is a big name, one of the best in the business at identifying long-term compounders and actually holding them for a long time to, actualize the phenomenal returns of some of these great companies. A couple of 100 baggers that Chuck Akre has owned. I think Markel Asset Management has been a 100 bagger, Berkshire Hathaway, American Tower. So just to name a couple that have been great long-term bets for Chuck Akre. You can see here he owns 14.75% of Topicus. Okay, so big name in cloner world to perhaps nudge you to look closer at Topicus. You got Chris Meyer and Chuck Akre in that company. So let's get to the Q&A for this week. First question is one I asked myself. I do this every time. I'm not sure why. What do you make of Li Lu's absence from Alibaba? Okay, so many super investors in Alibaba at the moment, but of course we don't see Li Lu bought in. And there's a number of people who have commented on that, so I'm just going to pull that down. But before that, I want to say back in like 2011 or 2012, I think it was, Warren Buffett listed, 3 investment managers that he would trust, that he would basically send his partners to invest with if he was no longer managing money. Those 3 investors were Seth Klarman, Greg Alexander, and Li Lu. Okay, so out of Buffett, Greg Alexander, Seth Klarman, and Li Lu, as far as I know, only one of those owns Alibaba. Okay, so I just thought that was an interesting nugget. Could he have bought it on a different exchange than New York? Absolutely. I mean, Li Lu, he's based in China. All right, China is really where he does most of his investing, at least as far as I'm aware. So he could have bought Alibaba through the Hong Kong exchange, and we might not know if he owned that one. There is sort of an SEC equivalent in China for, disclosures around who owns what. But I haven't dug too much into that. I did look up Li Lu's Himalaya Capital through that portal at one point, and there were 2 different companies that turned up. I believe it was, I can't remember, BYD and Postal Savings Bank of China. I think those were the 2 that he owned. Right, so someone here responded, Damus, could have bought it on the Hong Kong exchange. PDD is a direct competitor of Alibaba, so maybe, he doesn't want to own multiple. I'm not sure why. Maybe there's a conflict of interest. I don't know. Perhaps he understands something that others don't or sees more upside elsewhere. That could be. He owned it a couple of years ago and he sold out of Alibaba. So maybe there was something he just didn't like. And of course, with investing, there's no called strikes, right? So there's some little thing maybe Li Lu doesn't like about Alibaba. He could sell it off. It could still turn out to be a great investment, but maybe it just wasn't a fit for him for whatever reason. It is a tough question. I shouldn't have asked myself this question. Yeah, so really we just don't know. It is a little concerning that, the super investor tracked by Dataroma that really operates in China doesn't own Alibaba. But of course, Charlie Munger does. Li Lu and Charlie Munger are very close. So we can speculate until the cows come home about how much they discussed Alibaba before Charlie Munger bought. But anyway, we'll put that one to rest. It's a big question mark. And we can speculate all day about it. With the recent news that Pabrai is trimming his Micron position and the stock falling a bit, what are your plans with Micron going forward? Selling, buying, etc. So I'm really thinking about adding to my Micron position. I put like a 20% bet on Micron in 2019, around $35 per share. It's around $70 per share, so it's doubled. But I'm excited about what's on the horizon for Micron. So really thinking about adding more to that position. Obviously, it was a 20% bet a couple of years ago. Cash is constantly coming into my portfolio, so it's not that big now, although it has also grown. So it's still a pretty decent chunk of my portfolio. So yeah, I am thinking about buying more. Also with Seth Klarman adding 32% to his Micron stake. I think, if you have a super investor and they're adding to a position that they've owned in the past, they've owned for a while, that's actually a more bullish signal to me than an investor buying new into a company. This is something I've been thinking about the last couple of days. And it really goes back to what Pabrai and others say. You really don't understand a business until you own it, until after you own it. That's really when you learn the majority of what you know about a business is after you own it. And Seth Klarman has quite a history with Micron. So the fact that he's adding to that while he's trimming a number of his other top positions is, to me, a pretty bullish signal from Seth Klarman. So it's definitely something I'm thinking about adding to my position in Micron. And of course, Monish Pabrai mentioned recently that he thinks Micron is just getting started. So that trim back in Q1, I think 14 or 15%, Pabrai trimmed off of Micron. It's not something I'm seeing as a bearish signal from Monish Pabrai. I think he's very happy with his stake in Micron, and he is planning on riding that out for at least a couple more years. So those are my thoughts on Micron. I'll probably be making a video about Micron this week. If you want me to do that, let me know in the comments. That'll give me a nudge to make sure that happens. Next question. Everyone is now very confident about investing in Baba with the backup of all these super investors, but I'm sure all of them have been wrong at one time in their lives, maybe more than once. Can you share some examples where these heroes really lost a lot? Yeah, so that's a great video topic. Like that could be a series of videos. Absolutely. I mean, Pabrai says even the best investors are wrong at least 1/3 of the time. Okay, 1 out of every 3 investments, they messed up. It wasn't the right thesis. It didn't pan out the way they thought it would. So I know with Pabrai, he's had a couple donuts, in the history of Pabrai funds. So yeah, all investors are going to have bad investments. Okay, it's not like going to school and getting a test, right, in calculus where you can get a perfect score. There are no perfect scores in investing. It's not how this game works. It's a game of probabilities. It's a game of, hopefully you put more money on your highest conviction ideas and that those turn out to be right. So it's a totally different game. And yeah, there's so much you could get into here. Pabrai, actually, after the global financial crisis in 2008, had a team of interns go through and look at the biggest mistakes of great investors and tried to figure out, could those mistakes, could those investments that they made that went south, could it have been identified in advance that there were red flags that could have indicated to them that maybe we shouldn't be getting into these investments? And he learned a lot from that process. So this is a great thing for any investor to go through, to identify mistakes others have made and learn from those, rather than having to learn only from your own mistakes. It's a great way to leapfrog ahead in the investing space, and really in any space. SC, what's your take on looking at smaller, less covered companies you may see in 13Fs in a few years? Plenty of smaller things these guys would be all over if they were investing with sums our size, right? Smaller sums. Objection leading, yes. Yes, thank you for that objection. So I didn't have to make it. Yeah, I think it's a great idea. It's a very difficult game to play, okay? It's a much harder game to play. Obviously, if you have the skills to do this, the rewards are much higher as well, okay? So it's harder to do with higher potential rewards. Yeah, I have no issue with people doing this. I'm not there yet. I don't have the confidence. I don't have the skills. I don't have the history in investing to really make that a substantial portion of my portfolio. Those smaller, less covered companies that hopefully we'll see in those super investor portfolios in a couple of years. But I hope at some point I do have the skills to do that, to find that rhesus, right, that Pabrai found, the deep value meets incredible long-term compounder at a 20 million market cap. I do hope someday I'm able to find those kinds of opportunities. But until then, I'm happy to remain humble and primarily focus on shameless cloning, people much smarter than me. SC, I appreciate you've reached out to me on Twitter, shared a few ideas of these smaller, less covered companies. So I am going to take a look at those. Appreciate that. Rodrigo, what stocks in your portfolio do you think will give you a 5x or a 10x? Yeah, I think all of my big bets, which really just 3 at the moment, Micron, Seritage Growth Properties, and Alibaba, are all going to fit in that bucket within the next 10 years. I think they're all going to be at least a 5-bagger over the next 10 years. So pretty happy with those at the moment. They are all, well, with the exception of Seritage, quite large. But I still think they have some pretty nice tailwinds. I would love your insights on where the guru investors are going to research stocks and what they are reading to help further their own investment practices. Yeah, Pabrai has shared a lot about this. Well, so there's finding ideas and there's researching companies. Those are 2 different things. I think with researching stocks, digging into the 10Ks, the annual reports, calls with management, industry, reports. There's just so much to absorb at those levels. But in terms of reading to help further their own investment practices, everything. Okay. Charlie Munger says he doesn't know a single, I don't remember the term he uses, very smart person, a single, let's say, very smart person. It's not exactly what he says, that doesn't read all the time. Okay. Warren Buffett and Charlie Munger are reading constantly. Monish reads a lot. Okay. And it doesn't so much matter what you read. I think you follow your interests. You follow, what you want to read, and that sort of it's just going to make you a better investor. It's just going to expand your worldview and help you get rid of those things that you think are true now that aren't actually true. Okay. Hopefully what you read will get you closer and closer to what's real, what's true, what's reality, and help you understand what you don't know and expand what you do know. So anyway, what books do you suggest to learn how to read financial statements? In terms of financial statements, I like Aswath Damodaran. He does a lot of video content about this. He's written books. He's, pretty in the weeds. He really gets down to the details, but I think he's a very skilled educator, a very skilled teacher as well. And there's a few comments here. The interpretation of financial statements. I know Buffett has been involved with a few books along similar lines as this title here. There's a lot out there. I'm probably not the best person to ask on that, because the way I went about it is really, start at businesses that I'm interested in and just go through, figure out what great investors are buying and try to reverse engineer it, looking through the financial statements. Definitely not the most direct way to do it, but for me it was the more interesting way. It's kind of like piecing a puzzle together. So that's how I went about it. What's your favorite valuation method when analyzing businesses? Are there certain circumstances when you favor free cash flow over, say, earnings per share when using a discounted cash flow valuation? Also, for discount rate, do you still use 10% or has that percent changed? So I'm kind of shifting away from doing like a spreadsheet, a discounted cash flow valuation method, more into just trying to figure out what are the few variables that are really going to move the needle for the business over the next decade. And if it's not obvious, right, I don't need a spreadsheet to tell me if a business is obviously cheap. Okay, it's something I can do in my head. I mean, I've got an engineering background. Numbers they come naturally to me. So I'm kind of moving away from the Excel, the spreadsheet approach, and just looking at a couple things that really matter. And if it's not obvious doing the math in my head, it's probably not a very compelling or a compelling enough investment opportunity for me. So that's where I'm at these days. How would you rank your top 10 favorite investors with less than 500 million assets under management? So I love that question. I want to have that master list of investors that I want to clone under 500 million AUM. Andrew Rosenblum is a guy I've been kind of getting into lately, Bonsai Partners. And then Chris Meyer, author of 100 Baggers. I think he manages less than 100 million. So, let me know. You guys, I know all of you have smaller fund managers that you track. Let me know in the comments who your favorites are. I do want to compile like a master list of these folks. So hopefully every quarter I can have, the big time gurus, right? Showing you guys what has turned up on their 13Fs that are interesting, but also these smaller kind of more under the radar fund managers that I can kind of delve into what they've bought recently as well. I think that would really add to the value of 13F season for everyone. So let me know. Let me know who your guys' favorites are. Have you considered buying into some spin-off situations or special situations? So I think this is a reference to Joel Greenblatt and his book "You Can Be a Stock Market Genius," where Greenblatt, posted incredible returns over I think it was 20 years or so, like 40+% annual returns, mainly with spin-offs and special situations. It's not something I've looked into specifically. There is a spin-off in my latest 13F breakdown, my video from yesterday. Topicus is a spin-off of Constellation Software, okay? That one, like I said, I mentioned at the beginning of this video, both Chris Meyer bought into that and Chuck. Why do I keep calling him Chris? Probably because Chris Meyer. Chuck Akre have both bought into Topicus. If it's able to do anything like what Constellation Software has been able to do, could be a very compelling long-term compounder. So it's on my radar in terms of learning more about that company. How can one maintain a concentrated portfolio while having an active income? Do you use your active income to buy into your existing holdings, or do you buy new companies? Both. Okay. Like I said, I'm thinking about increasing my stake in Micron. Something a little conversation I had with Karan, who's also on Punch Card not too long ago, is this idea of, instead of constantly looking for new ideas, right, the constant search for new investment opportunities, it may actually be more beneficial to go deeper on the companies that you already own, and really just kind of double down where you find incredible opportunity there. Obviously, the companies in our portfolios, we're going to understand better, we're going to know better than companies that are outside the portfolio. So I think there's a lot to be said for doubling down on current holdings. But both. I use active income to increase existing holdings and find new opportunities, mainly through cloning great investors. So, and in terms of keeping it concentrated, one thing Chris Meyer mentions is he likes to own around 10 companies. He owns 11 now. When he bought 2 companies in Q1 of 2021, Evolution Gaming and Topicus, he sold off 2 holdings, okay, to keep it concentrated. And the 2 he bought, he thought were significantly more compelling as investment opportunities than the 2 that he sold. So that was his approach. There's no one-size-fits-all for this, but that's certainly one thing you can do. Don't add positions to the portfolio, new positions, unless they're significantly better than what you currently own. And if they are, maybe kick the ones that are on the bottom out of the portfolio. That's one way to go about it. If you were relying on stocks as your retirement vehicle and had to withdraw 4% per year, would your portfolio look different? How much cash and bonds might you hold? It probably would look different. I would probably be a little bit more focused on dividend payers, maybe companies that paid out around 4% per year. That could be something to look at. Like Verizon, I don't remember off the top of my head right now what Verizon pays out, but that could be something to look at. Probably wouldn't look at bonds, at least right now, where the market's at. Not sure how much cash I would have. I would probably just, have more exposure to strong dividend compounders. Whereas right now I'm mainly focused on growth, right? Companies that are plowing earnings back into growth and reinvesting in the business versus paying those earnings out as dividends. So that's probably what I would do. Have you come across a deep analysis of Facebook from the super investors? It's one of the most held stocks on Dataroma. It sure is. Has very strong moat, cheaper compared to other big tech, and an apex spawner by Pabrai standards. Wonder why we don't hear enough about Facebook. Yeah, probably what I would do. I haven't done too much of a deep dive into Facebook or seen any kind of comprehensive write-ups on Facebook. I know Seth Klarman has made some videos about Facebook. At this point, probably what I would do is I would do a search on Twitter for Facebook to see, which investors that I follow are talking about Facebook, and I would probably reach out to each of them and see if they've come across anything like that. That's a great way to find really solid write-ups of companies. Yeah, Facebook. I'm not going to get into it here. You mentioned Sprouts in the latest Punch Card episode. It looks quite cheap and potentially worth a deeper dive. What are your thoughts on the company, and might you load up the truck? So I don't have any plans to load up the truck on Sprouts Farmers Market. I don't shop there, so that's a big hit against me being interested in looking into the opportunity. I shop at Whole Foods. Sometimes I shop at Trader Joe's. And it's, the write-up on VIC that I saw on Sprouts wasn't all that compelling to me. I think it's a very competitive space to be in. I mean, you've got Walmart coming in with organic food. Obviously, Amazon owns Whole Foods, so they're, going to be going hard with the whole food delivery thing. I think it's going to be a very competitive space, and from where I'm sitting now, it's hard to see Sprouts as a long-term compounder that I'm happy to own for decades. But there could very well be something I'm missing about some key, competitive advantage that Sprouts has that's going to allow it to do very well over the long term. So I haven't done much work on it yet. I know someone on Twitter mentioned that they linked to a write-up on Sprouts that they had done. So check that out if you're on Twitter. Brad, would you save up a sum of money before you invest, or would you set aside a % of your income monthly that you will use for investing, and you would contribute monthly in the companies you want to invest if they are at your intrinsic value? This is if you're starting from zero but have good monthly income with no liabilities and emergency funds saved up. Personally, I use the second strategy. Yeah, so there's a few things that come up here. If you're just getting started, do not save up a lump sum of money before you start investing. Start right away, okay? Because you're not going to start learning about investing. You're not going to really start learning how to invest until you actually invest, okay? Buy your first stock. It doesn't really matter what it is, okay? Buy enough where you're uncomfortable if that stock goes to zero. Okay, because you're going to learn a lot about the psychology of investing, your own investor psychology, when you do that. That's when the learning really starts. So don't wait until you save up a certain amount before you start. Personally, there's money coming in, right, from the work that I do. I let it pile up until there's a compelling idea to buy into, okay? I feel no pressure to deploy that capital within a certain amount of time. If there's not a compelling opportunity for me to plow that money into, I am happy to just continue letting it pile up. And I know Karan feels similarly. We've had some conversations with investing with Frank about this. Frank isn't as keen to let the cash pile up because obviously there's a cash drag on the returns of the portfolio. doesn't bother me. So that's kind of how I go about it. Could you please talk about FRP holdings? I've been reading up on everything since you mentioned it. Honestly, I haven't looked more into FRP holdings since I, kind of shared my case for it on Punch Card about a month ago. It's something I'm kind of watching. I know Jack Duffley has done a little, or he hasn't done more digging into it yet, I don't think, but he's planning on doing more digging. He just bought a property, so that's really where his attention has been. But I expect he'll probably do a video analysis of FRP holdings in the near future. Anyway, and if any of you have done anything about FRP, let us know what you found in the comments as well. May we hear your thoughts on Bill Ackman? Thanks. Yeah, Bill Ackman, he's a great investor. Okay, clearly a very skilled investor. In terms of integrity, for me, the jury is still out on Bill Ackman. I get some kind of spidey sense with Bill Ackman that I don't quite trust him. Okay, and there's nothing that I can really point to say this is why I don't trust him. It's really kind of a gut feel. So, I have no plans to buy into Pershing Square Holdings. I know there's a number of fellas on Punch Card who are big on Pershing Square. So yeah, it's not much more than a spidey sense, but I definitely look to see what he's doing in his 13Fs. I have no problem cloning Bill Ackman. At this point, I just don't. I'm not comfortable. I wouldn't be comfortable putting my money with his fund. Thoughts on Daily Journal Corporation and Sprouts. So I talked about Sprouts briefly already. Daily Journal, it was interesting to see Guy Spear buy into Daily Journal. It didn't make the 13F roundup in the last video because it's pretty low conviction. It's less than 2% of assets under management for aquamarine funds. But it's an interesting company. If you want to dive into Daily Journal, look up Matt Peterson. He did a talk with acquirers funds Tobias Carlisle on What the Acquirers podcast. Matt Peterson talked about Daily Journal there. He did a talk through Manual of Ideas. He's put quite a bit out there, so check out Matt Peterson's take on Daily Journal. He thinks there's kind of some hidden assets that the market really isn't valuing properly. So, but on the flip side, Charlie Munger, in I think the last Daily Journal annual meeting, said he wouldn't buy Daily Journal at current prices. Okay, so Daily Journal isn't buying back stock. So if Charlie Munger isn't buying it, I'd probably wait until Charlie Munger is buying it, assuming that ever happens, right? While Charlie Munger is still at the helm. But my big thought on Daily Journal is Monish Pabrai and Charlie Munger are very tight, right? I think they meet up like every week, at least. Pre-pandemic, they were meeting up every week. So Daily Journal is right under Monish Pabrai's nose. Okay, it's right under his nose. And if Monish Pabrai hasn't bought into Daily Journal yet, it's kind of an easy pass for me. Who's the guy sitting behind Monish Pabrai? Every talk he gives, right? It's a bust of Charlie Munger. So for me, that's kind of keeping me on the sidelines with Daily Journal. I'm really waiting for the signal from Monish Pabrai on that one before I really dive in and do some work, kick the tires. I know Investing with Tom has put out a video about Daily Journal, so check that out as well if you're interested. Value investing is hard, and omission gets you, if not your mistakes. For almost a decade, S&P has done very well in also lifting the value stocks. Are you tracking your portfolio growth against the S&P 500 index? Are you able to beat the market? That is a great question. So I've gotten a little pushback about this from those of you viewers. I have not tracked my performance, okay? And the reason for that, I think it's a mistake to track performance on too small of a time scale, okay? I think it takes, longer than most people think. At the very minimum 5 years, probably even 10 or 15 years before you can, look at performance and tease out skill versus luck, okay? So if I were tracking my performance, I only have a couple years under my belt, at least in terms of my cloning approach. I don't think I'm going to get any useful information out of that. So, for at least 5 years. So I think it's probably, it's not a useful exercise. It's probably just, it's not helpful to look at how I've done over a period of 2 or 3 years. And compare that to the S&P 500. I don't think it's going to give me any actionable information. So I'm definitely going to see how I've done in my active portfolio, but I don't feel any hurry to do that. I think I can probably wait 5 years since I started in order to take a look at that. I'm fine waiting on that. I know that's not going to sit well for a lot of you, but that's okay. I would like to listen about BABA listing in U.S. versus Hong Kong, and is there any possibility for delisting from the U.S. exchange? I think a lot of these fears of delisting are overblown. Okay, I think Alibaba, it's important to them. It's important as this kind of international business that Alibaba is. They've had international investors from the beginning. I think it's important to them that they, maintain good relationships with their international investors and do what needs to be done to stay in good standing for the U.S. exchange. So I think it's overblown, but yeah, that's my personal take. How come none of the gurus bought Tencent? And this reply is spot on here. They may have bought it on other exchange or own it through other means where they don't have to disclose it publicly. So Tencent can be bought through the U.S., but it's over the counter, okay? And, some funds have mandates that don't allow them to buy over-the-counter securities, all right? So that could be a reason some of the funds aren't buying that particular listing. It's possible that, some great super investors that we follow have bought it through Hong Kong or other exchanges in China. So it's possible that they've bought it. We just don't know. Maybe even through Prosus and Naspers. It's not really a U.S. stock, at least on a major exchange. So that's going to discourage a lot of the larger investors from owning that particular listing. What is your opinion about buying dividend stock or REITs while you are still building your wealth? Does it make sense to buy them and reinvest the dividends? Yeah, so my take on this is I would rather own companies that are reinvesting earnings directly into the business rather than issuing me dividends that I then use to buy more stock, okay? It's more efficient for the company to just do that internally in terms of double taxation and things like that. So I'm not really looking for high dividend paying investment opportunities right now. I want companies that can reinvest at high rates of return. So do you think that Chuck Akre's new 4% position in Salesforce is worth a closer look, or do you tend to view 4% as too low conviction. Yeah, let's just take a quick peek at Chuck Akre. See, I said Chuck, right, instead of Chris. I'm learning. So where is Salesforce? It's down here at, what is that, 5, 6, 7, 8, 9? It's like the 10th or 11th largest holding for Akre Capital Management. You know, Salesforce, I don't really know anything about Salesforce. It seems like it's a great business, right? It's been an incredible compounder since it's IPO'd. But I don't have any particular knowledge edge, or I don't use Salesforce, right? So it's because of that, it's not something I could see myself buying and owning for decades. Yeah, it's just not a company I get excited about. It's also fairly low conviction for Chuck Akre. So yeah, it's not something I'm going to dig into personally, but you know, it might be compelling for some of you out there who are interested, who do use Salesforce. Yeah. How did you send a message to Monish? So Monish Pabrai, I've actually sent him a couple messages. I've sent him emails and I've sent him handwritten cards. Okay. With the handwritten cards, he'll scribble a little note on the back and then send it back, which is fun. I don't know if he does that anymore. I think, you know, ever since he's soliciting investment ideas from people, he's probably getting a lot more mail. And last time I sent him, I think it was an email, maybe it was a handwritten card. He didn't write on it. It was his assistant that wrote on it. So I think that, you know, ship may have sailed, where you can get a personalized message back from Monish. But it's probably still possible if you send him something that really adds value, if it's an investment idea that he finds compelling and digs into it, maybe even buys it. You may get a personalized message back. But you can easily email him, mp@pabraifunds.com. That's MP for Monish Pabrai at pabraifunds.com. Very easy to either send him an email or just look up Pabrai Funds. I'm sure you can find the address online. So you can do that a couple of ways. But obviously very exciting to get a personalized note back from Monish Pabrai. That is it for today's Q&A. Thank you all for your thoughtful questions this week. We're back with our regularly scheduled programming, so I hope to do a Q&A every weekend from here on out. So throughout the week, be thinking about what questions you guys want me to tackle next weekend. And with that, I will see you all in the next video. Take care.